I'm Laura Iriarte, Head of PR and Communications at 0100 Conferences, and I'm very happy here to be with Ricardo Miró-Quesada, Partner, Head of Private Equity at Arcano Capital. So, Ricardo, maybe you can start by telling us a little bit, not only about Arcano's private equity secondary investment strategy, but a little bit about Arcano itself.
Sure. Well, thank you, Laura, for the interview and inviting me. It's a real pleasure. So, Arcano, we're basically a financial services firm. We've got an alternative asset manager, which focuses mainly in private markets across private equity, venture capital, infrastructure, credit, and real estate. So we manage and advise around 12 billion euros, and half of those, more or less, are focused in private equity. In private equity, we basically do primary, secondaries, and co-investments. Secondaries being probably, a segment that's been growing the most the last few years, and that we're quite excited about it.
And what do you think it's been driving this growth in the secondary private equity in Europe, and how do you think this might evolve as other liquidity alternatives recover? At least that's been happening in the last year, basically, right?
Yeah. Sure. Look, it's definitely a growing market. Volumes last year reached all level highs. It was a record year, over 160 billion. That's more than 40% of the prior year and more than 20% versus the prior peak. So we're talking about a market that it's definitely growing. However, when you put it into context, we're only talking about 1-2% of the overall private market. So I think there's a lot of potential. And as the market develops, I think we'll see more specialization and more focus, not just in private equity, but we're starting to see also more action in infrastructure, venture, and other asset classes. I think that the potential is definitely there, and something to keep in mind, which I think it's quite relevant, is that usually funds will start to trade or come to the secondary market after a few years. Mm-hmm. Okay, so most of the funds that have been trading in the secondary markets are funds that were raised, let's say, pre-COVID, okay, so pre-2020. Usually the amount raised in a year will be traded over the years in a percentage of around 15%, okay? What does that mean for the secondary market is that in the coming years, we'll start to see those funds raised in 2020, 21, 22 come to market. And let's not forget that these were, especially 2021, was a record year in terms of fundraising. So there's a lot of capital that will be coming to market through secondary transactions. And that's extremely exciting, right? The catalyst, I think, for last year, obviously, was the lack of liquidity. That's been an issue for the last couple of years. So a lot of people did come to market to try to sell. And something that has also helped the market grow even faster is the development now for many years of the GP-led segment of the market. So it's not just LP stakes trading hands, but it's also the own GPs using the secondary market to, continue to hold some of the assets or trophy assets in some cases for longer, because they may need more capital or time, but at the same time, their LPs want some liquidity. So I think, look, it's very exciting times. We've grown a lot, but I think there's still a lot to be done. We don't have that crystal ball, but people do talk about volumes easily surpassing 200-300 billion in the next few years. So I think we're just seeing the tip of the iceberg right now.
And when do you think it will be or do you think it's already happening? That secondaries are just one more portfolio investing tool for the industry?
Yeah, totally. Look, I think when the industry started, it was more about people having liquidity issues and having to sell. Now, definitely, it's become more of a portfolio management tool as well for many investors, pension funds, endowments, families that may want to go out of a specific region, or may move some of those assets, or change a little bit their strategies from more fund investments to more direct, or whatever you can think of. So yeah, it's definitely becoming more of a portfolio management tool, which again, that makes basically, it's still an illiquid asset class, but the secondary market does give you sort of the at least alternative to be able to switch a little bit in between the life of the fund.
And when you talk about, so we've been seeing this growth in Europe, but in the US, this was a bit more mature, right? So what are the differences between these two markets?
Sure. Definitely, look, the US market is the largest market by far. So it's to no surprise that, the volumes are also much larger. Last year, more than 60, close to 70% of the secondary market was actually in the US. However, Europe it's still a relevant market. It represents, last year was around 1/4, so around 25% of the overall volume. So between North America and Europe, we're talking about most of the secondary market, right? Asia and some emerging markets are still sort of not that large. Europe, I think, has a lot of potential still. And in line with what I was saying before, it's also been a market where a lot of capital has been raised the last few years. So I think we'll continue to see that growth in the back of all the capital that we've seen raised, both from country-specific funds or pan-European funds.
As an investor, what are the main challenges when you have to identify the best or the right deals for secondary investments, this compared to other alternative investments?
Sure. I think one of the historical issues that the asset class has had is basically a lack of information or lack of transparency in some cases, right? I think that's changed a lot, but it's still not that easy, right? For someone that it's not already an investor in private equity to break into a secondary market, right? I mean, you need relationships across the industry, both GPs and LPs, but also advisors. So one of the limitations is you're either an investor in private equity or it's very hard to break into because, again, you need, it's not as easy as, buying or selling, public stocks, okay? These are illiquid. There's not a centralized market. And that, is sort of a barrier to entry. At the same time, it's an opportunity, right? Especially for investors like us. We've been doing this for 20 years and we're investors in hundreds of funds. So for us, that gives us an opportunity basically to have access to that information and be able to price funds or be closer to not just the GPs, but in many cases, the management of these companies. So I think that's been, again, one of the barriers, but at the same time, it's been an opportunity and that's evolving. And obviously, there's more and more access to information and transparency. And I think that's also been a good catalyst of why the secondary market has been able to grow. And I think, again, going back to GP-leds, on the LP stakes, that information mismatch is probably higher. I think in the case of GP-leds, not so much. Take into account that it's the GP who's the catalyst of the transaction, and there's an actual process being led by the GP and usually an advisor, where they're giving you access to a lot more, not only information, but actually to some of the key people as well, right? So again, I think it's been sort of a barrier that's changing, and we continue to see a lot of things to be done thanks to the development, especially of the GP-led market.